crush your enemies, see them driven before you, and to hear the lamentation of their women.
The penetrator. Ah, come on, look, because I always went the farthest into the target, goddammit. Libya, Tunisia, Lebanon, it was me, pal. I was always first in, last out.
This thing doesn't want to show itself. It wants to hide inside an imitation. It'll fight if it has to, but it's vulnerable out in the open.
Its blood was on the leaves.
If it bleeds, we can kill it.
I'd say that was pretty good. Good morning. Greetings, one and all. Welcome to Taco Tuesday here on Mornings of Mischief with the bad news from Mexican Ironman. Good morning, my friend. How are you doing this morning?
Well, it's a morning.
Indeed, it is.
Tax season is upon us. Banks are falling like rabbit chickens from another dimension. Lies are being told by our fearless leaders in Washington. And
lies like we're not going to pay for all of this.
Yeah, like that. Like we're not going to pay for this. Wait, how much are we paying for this? Hold on. We are not paying for this. Wait, how much do they need? That's exactly how this is going down. You know, you want the definition of Democrats and liberals lying to your face. This is it. At least back when it melted down before the Democrats and the Republicans came together to at least tell us what was going on and what they were doing. At least there was some disclosure. Now you're just being lied to your face, which is pretty standard run of the mill when you support liberal and Democrats. And yeah, I'm getting political this morning. I think the conservatives could do their bid to step up and take this as an opportunity to bitch about some stuff. The stuff that's flying is just hilarious. I was on a live stream on Midnight Sage yesterday, and it's typical. I get into a moronic fight with a guy named Darth Scipio, and yeah, I'm going to call him out because he consistently trolls shit in the fucking live chat. I said fracking again.
Well, like this, banks are falling like Mike.
He's like, oh, this happened because of Trump. No, this did not happen because of something Trump did. freaking morons. I always love people with an elementary education trying to have like PhD level analysis of financial matters of which they know not. But that is why we are here, ladies and gentlemen. We are in Loki's Mornings of Mischief with the coolest thumbnail and background I've ever seen. So let's get class in session. Let's learn about some stuff. And while we don't give stock advice, I am going to give you some financial advice from my perspective as a professional accountant. And that is classes in session, everybody. Loki is the dean of education. And while I'm not a professor in real life, I will be playing one for pretense today. I don't know what I would be a professor in. Let me think. Maybe dating. I'm an expert in that area. I think I like to call myself a subject matter expert in dating.
Going out windows.
No, there's no such degree. There's no degree for going out windows. That's not even a thing. By the way, I want to shout out to Mark the Infinitely Tired. I noticed he was scolding people for excessive use of emojis. Thank you, Mark. We do not want to be seeing emojis commensurate with the new Mexican Ironman terms of service that were launched Friday night.
What terms of service?
The terms of service that I proposed that were overwhelmingly voted down on Friday night on the live show. But
I have no memory of this.
Fear not, good people, because additional votes are being found and are coming in daily to overturn this decision. Yeah. So I want to thank Mark the Infinitely Tired for holding the line against those that would otherwise serve to use the emojis as a psychological tactic to take me off of my game.
Mark brings up something interesting here. I want to tell a little tale before you get into class, Mexican Ironman.
Yes, sir.
So Mark says even if Trump had a hand in it, the man has been out of office for 2.5 years, and the Dems had control of the House, Senate, and executive branch for most of that time. Indeed, they did. So back in what was this 2008, 2009, I was getting ready to buy a house.
Oh,
and they kept saying this thing over and over again. Make sure you're absolutely positive about doing this when you sign the papers, because once you sign the papers, it's done. There's no going back. There's no ifs, ands, or buts. There's no, well, we changed our mind or any of that. Once the papers are signed, that's it.
Yeah, kind of like dating a Puerto Rican girl. But okay, go ahead.
And we did that. We went in and we signed the papers for the house. And then 3 days later, the Fannie Mae, all the housing market crash happened. And we got a call the next day saying, you're not going to get the house. And I said, but wait a minute. We signed the papers and they signed the papers and the papers were signed. Yes, but you're not going to get the house. It's just that simple. You're not going to get it. With money down. And we got a deposit back, which they said was unrefundable. There's no way you're going to make sure you want to do this, because once you put the deposit down, that's it. You can't get the money back. Make sure it was all of these, make sure, because once you put the money down on it, that's it. Make sure once you sign the papers, that's it. And then nothing. And Obama bailed them out. And we paid for it. We all paid for it for years. We paid for it. We paid for it in higher taxes. We paid for it with everything. And now I'm looking at this going, is this happening again? It may not be the housing market, but look at what's happened. Look at the banks. Look at what the banks are doing. This is all because they put money, they put their investors' money into it's almost like the stock exchange.
No. Well, yes. Well, no, but yes. God, you're right, but you're not right, but you're right, but you're not.
Explain, because I've talked to a couple of people and that's how they see it. So explain.
Okay, who did you talk to? Who did you talk to? Because that's funny, because whether you're right or not right depends on the perspective. So let me break this down. Here's what happened. And then we're going to take a look at this bank and how it happened. So here's what happened. What happened is that, let me cover everything. Let's start with the Trump stuff. So Trump, one of the regulations of Dodd-Frank has to do with something called mark-to-market, and whether or not your investments are valued at whatever they really are in the market, or are you just holding them. For example, let me give you an analogy. So here, I'm going to tell you what happened, and I'm going to try to simplify it, and then we can go into what this means for everybody. Should you stay at your bank? Should you move to bank? What bank should you move to? Blah, 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 blah. Should you move at all? Blah, blah. What's your risk? Because that's what the people in our community, what we've got to do is we got to educate Valhalla and take care of Valhalla. So I'm going to come at it from that angle more than anything. I'm not going to come from it from some YouTube political channel, because you're not. You've never cared about clicks. So what we do is we care about Valhalla. So we're going to educate Valhalla, advise Valhalla, and make sure Valhalla is informed and taken care of. So how's that? Sound like a plan? I think it's a plan.
It's a plan.
Look at me making up a script as I go. Look at me. So what this happened is, this is a bank. There are three things that happened. Number one, this bank has had basically less than 250 billion in assets. It's not considered a large bank. It's a regional bank. When you have less than 250 billion of assets, you're considered a regional or community bank, and you don't have to declare, you don't have to manage and disclose certain things the way that big, huge banks like Chase and Bank of America do. Now, Bank of America is a shitty bank. Wells Fargo is the shittiest bank. A study was just released. I'll find the link before the end of the show that lists all of the banks and their global impact and their fragility. It was released by Goldman Sachs yesterday around 11 a.m. I have a copy of it. I'll put the link up in a minute once I've stopped talking. So here's what happened. They had about 240, arguably their value, $245 billion worth of assets. Of that stated assets, they had what they regarded as $12 billion worth of bonds. Bond is, you can look at it like a stock. It's certainly a security, just like Loki said. So he's right. It's like investing in the stock market, except you're not buying stocks, you're buying a bond. The way a bond works is that I buy something, and based upon the interest, that thing pays out. So let's say I wanted to buy a bond, and let's say that bond's worth $100 million, and it's paying 2% a year. That means that I own this bond that's worth this. But in the real world, as interest rates go up, and there's now bonds that are paying 4%, 5%, 6%. What's the value of that bond that I bought way back when interest rates were lower, that was paying 0, 1, or 2%, Loki? It's less, right? Because I would rather own a bond of 100 million, for example, in this example. I'd rather have a bond of 100 million that's paying 5% than a bond that for 100 million that's paying 2%, right? I mean, if you loan somebody money, does Loki want to make 5% a year? Does he want to make 1 or 2% a year? He wants to make 5% a year, right? Right. So what happened is that these guys had what they thought were $12 billion worth of bonds. But these bonds all paid out between 0 and say 2.5%. And they got them, and they took these positions back before interest rates started climbing, most recently under the Biden administration. So what happened is that they were sitting on these things, but then the interest rates have gone up. They've gone up like I think like 400 to 600 basis points. And I'm not going to get into that. That'll confuse people. But let's just say we all know interest rates have gone up, right, Loki? Is Loki still there? Okay, right. We all know interest rates have gone up. If you want to buy a house, it costs more interest than it did, 5-10 years ago. If you go for a credit card, your interest rate's higher. You want to buy a car, your interest rates are the payment on cars right now. If you go finance a car, you are screwed. The interest rates are higher for a car right now than they've been, I think in the history of financing the entire automotive industry ever. That's how high they are right now, even if you have good credit. Anyway, so what happened is they thought they had $12 billion worth of bonds. The interest rates went up again. More recently, they had to sell these things, and they were really worth, instead of being worth 12, they were worth minus 15. So they had a hole of about $3 billion. All right, think of it like a house. You own a house. You thought it was worth $1 million. You got $1 million into it, and you're selling it, but now you got to sell it at $700,000. So you've got a $300,000 loss on your house. That is what happened to this bank. And they couldn't hold it to maturity because the interest rates keep going up and up and up. And I think it hasn't been disclosed yet, but I think that they had I was talking about this with Elijah Snow. I think that they had like an option. Like there was a time period, or either the interest rate changing forced them to sell, or the date forced them to sell, or the risk manager, they thought they could survive this. And I'm going to tell you why they thought they could survive it. So they had a hold of they had something they thought was worth 12. In reality, it was minus 15, and they were short $3 billion. So what happened? So last week, billion. So what happened? So last week, when they made this decision to sell, that decision was made not last week, but the end of the week before. Last week, Monday, from the prior week to over the weekend and last weekend, they're like, fuck it. we're going to absorb this loss. We're simply going to sell stock, keep selling stock. They actually started that process at the end of December. We're just going to sell stock in the marketplace. Their stock value was 300 some odd 20. I think it was 320 a share. Then we're going to sell stock and or tell people that we're Silicon Valley Bank. People are going to send us money. So they in essence thought that they were going to do a GoFundMe. All right. So I'm using analogies to teach the people what happened here. So basically, they thought about a week and a half ago that they could just do a GoFundMe and come up with $3 billion. Okay. Man Squatch is asking me, why did they have to sell it? What forced them to deal with the loss? A Man Squatch, basically either A, the interest rates changed and they couldn't take the exposure anymore because interest rates are projected to keep going up. And at some point, it's kind of like a house. If my house is worth $1 million and I now find out the guy next door sold it for $700,000 and the person down the street just listed theirs for $500, do I hang on for $500 or do I dump where I'm at and move on to the next deal? That's what happened. All right. So let me go back, answer Man Squat's question. Now move forward. So they decided they're going to do a GoFundMe. They're like, well, we're Silicon Valley Bank. And who is Silicon Valley Bank? We'll show you that in a second. Silicon Valley Bank is pretty much the fancy pants bank for social media, hot tech, venture capitals, leftist startups in Silicon Valley. They're one of two banks, the other being First Republic Bank. Silicon Valley Bank and First Republic Bank are basically very similar. First Republic Bank is teetering on the edge right now. They're in a better, they don't have as bad of a bond position, but they're kind of their depositors are freaking out and they're trying to keep them from getting taken over right now. Anyway, so they decide they're going to do a GoFundMe. And they're like, this shouldn't be a problem. We only need $2.5 billion. Now, you might say that sounds fucking ridiculous. Well, I'll tell you why it's not ridiculous to them. The reason why it's not ridiculous is let's go back to 10 minutes ago when I told you the value of this bank was about $245 billion in assets, right? So
Right.
If you take 245 billion and they had cash reserves on this bond deal on their portfolio of about $500 million. They had about 500 million in cash anyways in their investment portfolio. So they didn't need all 3 billion, worth 12 billion, lost 15, whole of 3. They're like, well, we got 500. Let's just do a GoFundMe for 2.5 billion. And we're good. We're good, Loki. We only need a GoFundMe for 2.5 billion.
That's insanity.
Here's why they thought they could pull it off, because their assets are 245 billion. Now, if you take 10% of 245 billion, that's 24. If you take 1%, that's like 2.5 billion. So funny thing is that they basically said, look, of 100 pennies that we have, think of it like this. You've got $100 worth of bills in a month, Loki. And they were short $1. Because if you look at 100% of 245 billion, what's 1% of that? About 2.4
yeah,
billion.
2.4 and a half.
So basically they were short 1 penny out of $1 or $1 out of 100. That's what they are short. So from their way, think of it like this. Let's say my bills are $10,000 a month, which they actually are, excluding, my overhead's about 25 grand a month. But let's just say at home, my home bills are $10,000 a month. I'm basically short 1% of that. Like I need to do a GoFundMe for $100 type of thing, or $100 to $1,000, type of thing. 10% of 10% of 10,000 is 1,000. 1%'s not even, 1% of that is like one less zero. So they thought, look, we only need to do a GoFundMe for 1% of our total value of the assets of our bank. This should be a slam dunk. However, here's what happened. The depositors and the depositors are mostly, there are 3 types of people that bank at this bank, and I'm going to tell you who they are. But the depositors and the board of directors got wind of this and like, wait a minute, we got to do a fucking GoFundMe for 1% of the entire value and we actually have to do a GoFundMe. It's not called a GoFundMe, it's called a capital raise. They had to do a capital raise. They were looking for, for that much in cash. But regardless of, think of like GoFundMe, whether you get the money in PayPal or Visa, it's still a GoFundMe, right? So they're like, wait a minute, if we're short $1 out of 100, then we're teetering on the edge. So the people at the depositors were like, fuck this. Let's get our money out. So starting last Tuesday of last week, wires started flying. All the depositors started wiring millions upon millions upon millions of dollars out of this bank to other accounts they had at other banks. By Thursday, 3 o'clock, there was no more cash on hand that could be guaranteed by Silicon Valley Bank to wire out, even though the account balances at Silicon Valley Bank said that the people had more money. So they shut down the wires Thursday, 3 o'clock, and by Friday morning, they were taken over by FDIC. But Mike, it's my money. Why can't I access the money? Because your account at any bank is only insured. Generally, the way insurance works, almost everywhere, is
$250,000.
it's $100,000 per account.
Really?
Up to $250,000 per bank.
Oh shit.
So no, you cannot. You're not necessarily safe if you've got $250,000 in one account at that bank. They might make that exception, but generally it's $100,000 per account, $250 max per bank. So my clients are not exposed to Silicon Valley Bank because I know Silicon Valley Bank very, very, very well, and I have since I started my practice in 2005 in Silicon Valley. And I used to do a lot of tech startup audits where one company would buy another company. I even did a Twitter acquisition where I went in and analyzed the company that Twitter was going to buy, a startup. Silicon Valley Bank, I know this bank incredibly well. Maybe not in recent years. I've just been watching it from afar, but none of my clients are exposed to Silicon Valley Bank. The one client I had at First Republic Bank who was about to make a wire deposit of $300,000 from a real estate deal we did last week. I called him Friday morning and told him to not send his money to First Republic Bank, and he's holding a cashier's check for almost $300,000 in his hand until I tell him what bank to go and send it to. And the reason you might say, well, how do I control where someone banks? Pretty simple. I say, because if you get fucked based upon the bank you choose, you don't get to call me and I don't get to help you out. And if I do get that call, it's $500 an hour with a 1 hour minimum for me to take that call. I'm not kidding.
No, I've been here. Let me, guys, I've been here because Mike has actually said this to me before. Because, if you do not do what I tell you to do and you fuck this up, no, it's just the way that.
It's the way I am.
He's told me this before.
I don't believe in this horse shit. I don't believe in this horse shit of the client is always right. Fuck that. By the time a client gets to me to have to help them, they better listen to fuck everything I tell them to do. It's not like they better listen to what I tell them to do or there's a penalty. So,
apparently McKinney knows First Republic Bank because it's right across the street from where he works, and Salesforce is on the other side.
First Republic Bank has this distinct notoriety. They have a full-blown branch inside the Twitter headquarters. McKinney.
Oh, did I see McKinney?
You see, you know what? I don't have problems until I'm on the show with you. I swear. I talk about him all the time. I do not have problems except when I'm with you on a show. I'm telling you. It's
McKinney. It's McKinney. Yeah, McKinney.
No, it's McKinney.
No, it's McKinney.
It's McKinney.
No, McKinney is the wrong way. McKinney is the right way.
See what I mean?
You say potato when I say potato. You say tomato. I just did a
live stream with him 3 weeks ago, and I didn't have problems for 3 hours. And I can show up with you, and now I can't get it right. Anyway, First Republic Bank has its actual bank branch at the Twitter headquarters and at Facebook's headquarters. Imagine going to work, and there's your bank. Now, who is First Republic and who is Silicon Valley Bank's customers? They have 3 customers. 1, large venture capital firms. Rich ass people, most of whom are woke and leftist as fuck. Number 2,
Mikey, you gotta read that.
Mikey speaking numbers and deep diving into financials, economics, and accounting is fire.
Oh,
okay, Loki, I gotta go. There's a flight. Loki, hold on. I gotta go. There's a flight leaving to Virginia in about 1 hour. Gotta go.
Ladies and gentlemen, thank you, Max. Oh, he's back. He's back.
I'm back. I gotta get.
You're on the mobile in the car, right?
No, I'm not. I gotta get to Virginia to visit Mags. That's my next meetup goal for May or June. All right. Anyway, back to the topic. So, second type of so you have venture capital firms that have that fund startups. The second group of people are the startups that receive this money, and the third type of people that are at these that are Silicon Valley Bank are the people that work for the VCs and work at the startups. And that's true at First Republic Bank, especially because the First Republic Bank had the Smarty Pants idea. They're like, why don't we just put a branch, since these guys are putting money in here to fund these guys and we're loaning these guys money, why don't we just put a branch right there? So who are these banks? Well, let's take a tour. I got a couple things to show you, Loki.
Oh, do you have the music videos?
What music videos?
Apparently, First Republic Bank, and I've seen them, and they are cringe as fuck, spent millions and millions of dollars on music videos about their bank.
Oh, First Republic Bank has really good PR and marketing. Yeah,
So.
here you work on First Republic Bank. I'm going to bring up the Silicon Valley bank stuff. If you want to find those, go find them.
Well, they're very close to copyright, so I'm not going to complain.
Oh, they are.
They're cringy as fuck. At least for me, I think they're cringy as hell. They steal music and they reword the words so it's like stuff for them, but it's millions and millions and millions of dollars producing music videos for a bank. And it's all about don't we accept your kind here. They even say that in the fucking commercial. So I was listening to those. Thanks to Ironcaster this morning. I was listening to those because he shared them. And they literally say, we accept your kind here. And I was like, what the fuck does that mean?
Well, let's find out. In December 2021, a little over a year ago, Silicon Valley partners with Latinx VC to double the number of Latinx venture capitalists. Latinx VC is focused on getting Latinx individuals into venture capital, supporting and retaining Latinx individuals currently in the ecosystem, and providing access to limited partners for Latinx VCs. Now, I've been aware of this initiative for years. And I got to tell you, when I was sitting there in COVID and post-COVID, I had multiple emails that flew across my desk asking me if I wanted to potentially get funded by not just Silicon Valley Bank, but other places, because as you can imagine, if I had a technologically driven accounting, tax, CFO type startup, it would fit in nicely with all of this crap. But what did I do, Loki? I never touched this shit. This would have been
He
easy.
said no.
I said no. I did not bend the knee and sell out. And I could have. I mean, I went to Stanford, I went to Oxford. I've got, nice degrees, great GPA from both places. I've got a ton of clients and business clients that are in four time zones, all of which will endorse my work, whether they do 10 grand, whether they do like less than 100 grand, or they do several million a year. They all will have glowing references. Shit, I got references even from IRS agents that I've worked with. But this is the kind of woke ass bullshit that we're dealing with. Right? Now, let's take a look at while you read some super chats and read some comments. I need about 30 seconds. I'm going to find some more stuff I want to share.
Man Squatch says we didn't land on SBC. SBC landed on us.
Yes.
Machini Draw says Latinx venture capitalist. What the fuck?
Yeah, exactly. It's like, first of all, get the name right. Latinx. What's that? Like, we're going to invest in the name of something that doesn't even exist in the real world. And then what are they? Can I be blunt? Let's just say my people get a bunch of venture capital money. What the fuck are we going to do for? I mean, seriously, what are we going to do? Commercial. Let me think. What are we going to do? Tortilla farming business? Like automating tortilla jalapeno processing? What are we going to do? Invest in a startup that cleans large office buildings at night? I mean, are we gonna start a Latinx VC project? What's that? We're gonna build shelters for outdoors in the parking lots at Home Depot for the Mexican workers so they don't have to experience rain in the morning. I can do this all day. I know you don't want to laugh because you're trying not to be racist, but that's funny as fuck. Come on, you can laugh, white guy. Come on, white guy.
I want to, you know what I want to do? I want to, and this is beautiful right here. I want to be the guy that makes a coating for clothing to where grass doesn't stick to the clothes.
There you go.
I mean, instant hit.
There you go.
Because all the lawn mowing and hedge trimming.
Right? All right,
Oh my
I got another
God.
one to share. Let's take a look at who got us here, Loki. Can we do that?
Oh yeah.
Let's take a look. Here is our Silicon Valley Bank Investment Committee. Super stunning and brave.
Yeah, I saw this. A lot of Karens. There are 4 Karens. It's 4 Karens, and one of them's even named Karen.
Yep.
Isn't that interesting? The Karens that were in charge of all the investment at Silicon Valley Bank.
And what people aren't reporting is that this bank, these ladies, which is typical, I'm going to say it, which is typical of ladies who try to work together, they did not have a chief risk assessment officer from April of 2022 until mid-January of 2023. That is like a bunch of people being in a bus and they can't agree on who the driver's supposed to be, so they just put the car on cruise control and let it roll. They did not have a chief risk assessment officer. This is a big fucking deal. And I know why. I don't know exactly why, but I'm going to conjecture, which is that when you get a bunch of women together, the last thing that they can agree on is which woman's going to be in charge, because women are highly competitive, highly emotional. And when the last one stepped down, they couldn't come up with it. The bank did not make it a priority to decide who was going to be in charge of risk assessment until January. By January, it's already too late. In December, they started selling stock left and right to try to raise capital. Did you see that Kramer? Did you know that Kramer from MSNBC was just as recently as 3 weeks ago, was telling people that they needed to buy stock in this company? Did you know that?
No, I had no idea.
Okay, well,
I know that the owner unloaded like millions of dollars worth of his stock just like 3 weeks ago. And everybody's like, oh, well, there was nothing illegal about that. It's okay.
Well, actually, it was the officers of the bank, not the owner, the officers, the CEO.
Oh, the CEO.
Bank.
If I said owner, I misspoke. CEO of the bank, the head cheese, the big wig, and his second in command both sold stocks weeks ago. And there's nothing wrong about that. Oh, it was scheduled. It was a scheduled sale. We scheduled it. Well, they knew. They had to know 6 months ago when they scheduled it exactly where this was going.
Silicon Valley Bank CEO sold 3.6 million of stock and potentially problematic transaction days before historic bank failure. What?
They also paid every single employee at the bank between $2,500 to $147,000 in bonuses a week before this happened.
Prearranged plan. So this was a prearranged plan. So they're probably getting sued, but this is part of what's called a prearranged plan, where they plan to sell stock and they just divide it up over random dates over time. There's nothing illegal about corporate trading plans like the one Becker used. The plans were set up by the SEC back in 2000 to thwart insider trading. However, critics say the prearranged share sale plans called 10b5-1 plans have significant loopholes, including they lack mandatory cooling off periods, which is what Loki is talking about, because they knew that they had this position and they could have held on to it instead, but they chose not to. Loki, why would bank officers not do what's right for the people? I don't understand.
Because they want to get money, and they wanted money before this happened, and no one was going to buy their shitty stock after this happened. So this was their last hoorah to get as much money as they could and squeeze out of it as possible.
Silicon Valley Bank, as reported in the New York Post, gave out bonuses just before the collapse. Oh no!
Yeah, this is the big one, ladies and gentlemen. They've known this was coming, and they still did this shit, and then scared the shit out of people by cutting them off from their money and saying, "Sorry, I can't give you any."
Reportedly received their annual bonuses just hours before the financial institution collapsed and ahead of an expected Monday morning run by customers desperate for their cash. Employees who agree to stay on with the Fed Bank says they will receive 1.5 times their normal pay. So get this. If you're an employee, here's another funny thing I'm not hearing in the news. If you're an employee, one of the things the FDIC does is that they use the people that were already there during the transition period, and they usually pay them consulting rates that are higher than wage rates. So let's say I was part of this mess, I could actually stay on and increase my salary by 50% just by sticking around the ship that I helped sink.
That's insanity.
It's right here, Loki. I'm reading it. I'm not making this up. Right
This
here.
is fucking nuts. And this is what the president of these United States is paying for right now, is all this shit.
Employees who agree to stay on with the failed bank also will receive 1.5 times their normal pay for the next 45 days, and with hourly workers getting double their normal rate. Axios reported on Saturday. Now, Shum, my good friend, and I do mean that with sincerity, even though I tease him and he teases me, makes a comment in the chat. And his comment was, I'm seeing stories that Peter Thiel may have been the one to start the run on the bank. Yes, indeed. Silicon Valley collapse. Peter Thiel's role scrutinized as spark of the bank run, because Peter Thiel, a tech mogul, he was my editor when I volunteered for the. He went to Stanford. He was, I think, he's older than me, obviously, but he ran the Stanford Review, which was the conservative publication on campus. I only got to meet him once, but I volunteered for the Stanford not the Stanford Daily, for the Stanford Review during my freshman and sophomore year. Should have gotten closer to this guy. Maybe I'd be a billionaire by now. Anyway, tech mogul and Republican campaign donor Peter Thiel has been accused of sparking the run on the bank that forced regulators to close down Silicon Valley Bank. Yes, so what he did is he basically figured this shit out, and he got all of his money out.
Oh yeah, not a bad idea.
Does that make him evil, or
no?
Loki, is he evil because a lot of these woke leftist liberal VCs and employees and tech companies are now scrambling for cash? Does that make him evil, or does that make him smart?
Explain why you're saying that, so everybody understands that it's not just the dumb things they were doing and saying, well, we're only gonna do startups with this or that. It was the absolutely moronic way they were running things that got them here.
Yeah, because here's the deal. It's the fact of the matter is that these bonds that they had that were paying out 1 to 3%, or I don't even know what the lowest one was, but let's just say below 3% and less. It's like this, Loki. It's like if you bought the house for $1 million and you see that the price is going down around you, and you know that you have to sell because you can, at some point, you can't afford to keep this going, right? You can't
sell.
So at some point you got to sell these bonds. No one was hedging that risk. No one at the bank gave a shit, and at some point it's going to affect the depositors' funds. And so if you're sitting there and you got your money in this bank, and these people are taking risks to the point to where they need to do a go. I mean, think of it this way. It's like, you want to support your friend, but if they got to run a GoFundMe for $1 and they out of 100 that they need, something's real wrong with how they spend money.
Yeah. Oh yeah.
And Peter Thiel saw that and said, fuck these guys, I'm out. Good for him, I say. Good for him. And as far as I'm concerned, this bank can crash and burn.
So let me ask you something, because you keep bringing up housing, and this is almost shadowing what happened in 2008 and 2009.
Well, except for two significant differences. It's the same but different in two ways. But I can go into that if you want.
So, I know, and I know what led to that. The way they were doing loans. And I mean, so let's say you go to a
so here's how it's the same, and here's how it's different. So here's how it's the same. Loki's 100% right. It's very similar because these banks invested in mortgage-backed securities back then, and all the banks were invested in them, and the subprime notes and declared income mortgages, self-declared income mortgages were flimsy, and so everybody got penalized. Now, in this regard, this bank invested in another type of security, which is called a bond. So in that sense, it's the same. You've got a bank investing in a security, and that security is not worth the paper it was originally written on. So yes, Loki, it's the same in that way. Yes, except here's how it's different. It's different in two ways. Number one is that the bond market is not quite as big as the housing market by a long stretch. And actually, there's three reasons it's different. Number two is that back then, all of these banks were buying each other's bullshit made up ass securities. That's not happening anymore. These are actual bonds. And the third way it's different is that most banks aren't stupid and moronic and idiot. Like, these people they were having, for International Women's Day last week, right before they failed, they had a Latinx leadership conference for women only to celebrate achievements of women in finance that are Latinx. I mean, it's like they just weren't paying attention at all.
No, or they just didn't care.
They didn't care.
Yes,
that's it. That's it, Loki. Right there. What you said is it. They didn't care. They didn't think they had to care.
Well, look at Enron. Look what happened at Enron before the end. People were getting $1 million bonuses. They were telling people, you will be a millionaire your first year here. You're going to be a millionaire. As soon as you get hired on, whether you're a secretary, whether you're a mail guy, whether you're in the office, you're going to be a millionaire the first year you work here. And they were selling bullshit. They were selling invisible things that were never going to happen. And they just knew, we're going to squeeze this shit for all it's worth. We're going to get as much money. And then in the end, they wouldn't even let their own employees sell their stocks until it was worth what, like $2? $2 a share. And Enron was tanked and there was nothing left.
Well, that's the other thing that's different, which is that the other thing that's different is that there's no bailout of the stock price of this thing like there was before. Before, money was used to loan to one bank. The government gave money to one bank as a loan so that bank could buy another bank's stock at a set price and basically bail them out. In this case, the investors of this bank, the people who bought stock, and now the stock has crashed to 60, 70, 80% of the value, and it's like went from 320 down to fucking whatever. I mean, there's people that bought the stock up at $600, $700 a share a year ago. That's how high it was trading. And when Kramer, speaking of which, you got to get the Kramer Silicon Valley Bank video up. When Kramer, Silicon Valley Bank.
Thank you, Brandon, the antibody guy, for becoming a member of Loki's army. You guys keep the fires burning bright here in Valhalla. And this one is for you. Welcome to the Viking Lord. Skull! You get that video ready?
It's coming. Do another comment. I didn't need one more second.
Mahogany Draws says, Go Hojo. What is up, Hojo? He says, hello, my friend, Skull. Good morning, Hojo. Shum, what is up, Shum? Good morning. Let's see. The Project Storytime says the entire point of banks is to make smart and sound investments. You must always protect your clients first. I absolutely agree with that, Josh. But that's not what happened here. You've got the employees, the investment team running around like Karens. They look like a mix between Harley Quinn and the Joker with all the face paint they have on. And they're basically trying to do the Scrooge McDuck swan dive into your money and are playing with it. That does not seem like a sound investment to me at all. Brandon, the anime guy with $10 super chat. These banks have a few things in common. ESG, DEI, crypto, tech, all regional types of banks. A few theorists are seeing a pattern. Controlled demolition of our economy. Just a thought. What do you think about that, Mikey? Mikey.
Yeah, I'm reading it right now. Hold on. I've seen a pattern. Controlled demolition of our economy. Just a thought. Controlled demolition. That's a little bit out there. I mean, bankers by definition are greedy ass motherfuckers. You know, they don't want the economy to collapse. That's kind of, I don't know, that's kind of way out there on the prepper scale for me, buddy, Brandon. All right, here we go.
All right.
Let's see what we got here. Wait, oh shit, I forgot to share the audio. Hold on, let me go back. Present. I'm not a YouTuber, so I don't know how these things work very well.
Oh, hush. I heard you last night on Klobby's stream. You are indeed a YouTuber.
I was emotional when I said that.
Yeah, I know. So was I when I heard it. But still.
Come on.
SVB Financial, don't you want? This company's a merchant bank with a deposit base that Wall Street had been mistakenly concerned about. SVB is the old Silicon Valley Bank. Recently bought one of our favorite research firms, Moffett-Nathanson, and it's become less dependent upon private equity and venture capitalist offerings. Wait a second. Those dried up last year, they could come back. Yes, some of them come back here, but the stock directly affects an oversold position. Stock was the fourth worst performer in 2022. I think the fears were not justified. It's a very compelling situation. Hey, by the way, long-term private equity and venture capital, they're not going away. Being the banker to these immense pools of capital has always been a very good business. Stock's still cheap. Now, you have to remember that a stock that falls 66%, like SVB Financial did last year, it takes it a lot more to recover. After losing 2/3 of your value, you need a 200% gain to get back to even. This is arithmetic. Some people call it geometry. So you could argue SVB's nearly 40% rally this year is barely a drop in the bucket. And that's how I want you to think it. I think it's also a good example of why these bounce back moves might be far from over. These stocks should have more room to run, especially if you think they were driven down to artificially low levels by tax loss selling, artificial dumping, like we saw in Warner Bros. Discovery or Tesla. That's important because today was one of the worst days since the year began. After these stocks were big participants in the decline, I understand that. Many of the bounces this year have come from stocks that were heavily shorted. Many of them were correctly beaten down. It's just that the declines got a little too excessive when nothing really bad happened.
Yeah.
So he knew a month before everybody else did. How long did the bank know?
Well, I don't know. It's no one at this bank knew that the clock was ticking, that there was a timer and a stick of dynamite with a fuse. No one knew that per se.
Okay, so it's not as bad as, let's say, Enron was.
No, Enron was a flat out fraud where people were lying and stealing money to cover up the reputation and their losses, and they were lying actively. This is not that. This is stupidity and idiocy combined with bad federal policy. It's kind of like, it's kind of like the Biden administration keeps raising interest rates, not giving a shit what the fuck's going to happen.
Yeah, no.
This is one of the things that happens when you raise interest rates. And similarly, if you're a banker, you got to wake up out of your ass. And what happened is a lot of these young ass, and I'm going to say it, these bitches on the fucking investment committee are sitting here making time to go on here. They're used to cheap money. Why? Because after 2000, you saw how young they are. What's their life experience? Their life experience is that when the banking is too big to fail, right? You saw how young they are. So they don't know life back in the 1990s. They weren't here for the 87 stock crash. They weren't here in the 90s. They didn't see the dot-com explosion in 2000, 2001. Their reality is that, hey, banks are too big to fail. Money's cheap because when COVID happened, we printed more and gave everybody pay.
And if something's bad, we'll get a bailout.
Nothing bad can ever happen. So they've only known success and they're woke. This bank has operated no different than frickin' Hollywood that you and I talk about every single week, where they were like riding high on their laurels and making money. And now all of a sudden they can do whatever they want, be woke, go broke. Well, it's happened in Hollywood. It's happened to Star Wars. It's happened to Star Trek. Now it's happened to Silicon Valley Bank. Be woke, go broke.
And thank you, ZBR, for that super sticker. No, I absolutely agree. Be woke, go broke. And if they were too stupid to realize what was coming, that's on them.
Exactly.
That's on them. Okay, so housing right now is a big thing, right? It was a huge thing the last couple of years. You had houses going for 2%, 2.5%, 3%. Well, why is that important, Loki? If you buy a house, let's say 7%, which is what they're trying to get now, if in 2 years we're back, or 2 or 3 years we're back at 2-3%, which probably won't happen, but it could. Stranger things have happened. You're paying more than double than what you should for that house. And by the time you are done paying it, if you want to sell it, you're not going to make up the money you spend on it ever. It's just not going to happen. It's not going to be worth that much more later. So if you go out and you buy a brand new house, and you end up paying $400,000 for it instead of $250,000. If you want to sell that house before your 30's up, you're negative money. you're going to end up owing more money than that house is worth. So even if you sell it, you're not going to get the money back that you paid for it. It's just not going to happen. You're screwed. And it sounds like they went into this thinking, oh, well, we'll buy these at 2%. We'll make 2%. And now it's going for 5-6%. And it just wasn't worth what they paid for it.
Nope. Oh, my brain hurts. I'm mentally tired. I think Mags for $5 says, you might have mentioned this, but didn't the administration try to force foreign Ks to invest in these DEIs and ESG woke crap? Well, that's true, but you've got a bigger problem, Mags, which is that you have companies. See, I think you have companies out there that are unilaterally investing in DEI shit, and they're not asking their people what to do. So all the hilarious thing about what's happening in America that I find hilarious is that all these people are bitching, complaining that America's getting woke. Yet, if you've got a 401k or you have any kind of retirement plans, you're a police officer, you're a fire guy, you're a civil servant, whatever. Guess what? The people that are managing your retirement money are like people like Fidelity, and other people are putting their money into a bunch of woke ass DEI crap, and your retirement is funding their political stances on ripping apart the very culture and fabric of this country that made this country great once upon a time.
Thank you, Max, for that $5 super chat. You guys keep the fires burning bright here in Valhalla, and this one's just for you, Max. Of course, a little toxic femininity this morning. Skull! You know what I figured out the other night?
What?
I figured out that if I set a static object to motion, it will follow where I put it. So technically, I can take that Conan skull and put your face over him and have it like move with the body.
No, we don't need to do that. We've got more important things to do. Nope.
You don't want Mags to see you as Conan the Barbarian? Okay.
Oh, wait. I spoke too soon. Hold on. Going backwards. Wait. Put the needle on the record. Play again. Wow, Loki, that sounds like an amazing idea. I think that'd be awesome.
I imagine so.
My brain hurts, and tomorrow's tax day. So Loki, I will be going on a vacation from Thursday morning until Tuesday. I need a mental health break.
A mental health break.
Yeah.
You mean you want to go get some poon somewhere?
What? No.
Yes.
No, not till Maine. Not till I get to Virginia. Ha ha.
Mm-hmm.
Anyway, so Loki, as let's talk about this. Some of the worst bank. I'm looking at the Goldman Sachs list. For some reason, I can't bring it up. I can't get the formatting right. But if you want to go at a large national bank, I'm going to say it. Chase is probably the best place to go, and Wells Fargo is the worst place to go.
Yeah, fuck Wells Fargo. You want someone to dig into your credit history and absolutely ruin you for years, go to Wells Fargo. You do that at your own peril. I did that, and it wasn't soon after that I started to get all this stuff about this other me that has the same birthday as me show up on all my tax crap, and yeah, it even affected jobs. When I went for a job, I didn't get a job because this guy's background history showed up on my stuff, even though he had a different social security number.
Right, someone else's life showed up on your report. What the?
Yes,
I know. That's what they do.
Yeah.
So we were talking about this earlier. This is the Goldman Sachs list. I was able to get the formatting done. I made a PDF out of it. Financial Stability Board, November 21st, 2022. This is the 2022 list of globally systematically important banks, and it deals with financial stability. Okay, up at the top is who gets a 3.5% rating in terms of assets, and are they at bucket 5? No bank is at the top layer. At the top, tier 4 is by itself is JP Morgan Chase. Tier 3, Bank of America.
That's where I'm moving my stuff to. So that'll happen either this year or next year.
There are only 3 banks that I currently recommend. One of the banks that I recommend isn't even on here. Oh, that's because they're not international. Okay. So anyway, I'll get to that in a minute. JP Morgan, Bank of America, Citigroup, HSBC. I hate Bank of America. Okay. But look at this. Bank of China is in there with Barclays and others. This is an international list. Right. And why is this important? Because if things happen internationally, you want to be stable here on the outside. And at tier 1, the lowest tier,
Wells Fargo, Unicredit. Yeah.
Wells Fargo is ranked the same as the Agricultural Bank of China.
Yeah, Wells Fargo sucks.
I was on a live stream with Chato yesterday, and he mentioned, "Oh, you should go to Royal Bank of Canada." I didn't want to call him out on the live stream, but I was like laughing inside because I already had this list. I was like, "Yeah, right." But and the other thing too is that Royal Bank of Canada is a very stable bank inside Canada, but internationally they're not, because they've taken positions in cross-border securities that are risky. Same thing that Wells Fargo. Wells Fargo's done it for years. UBS has done it for years. Santander Bank, that is a Mexican bank, dude, or a Latin American bank. I mean, get out of here. Get the fuck out of here. So if you're Wells Fargo, get the fuck out, is what I think. None of my clients are Wells Fargo. None. If you're going to be at a bank in the U.S., I only recommend 3 right now. JP Morgan Chase, U.S. Bank, and First Citizens Bank is new. They're a national bank, but they are held by a family. Their assets are excellent. They don't do any cross-border stuff. They're very liquid, and they've been run by the same family for a couple hundred years, and they will never, ever sell to a large bank because it's written into their charter that they care about the depositors and their communities first. And it's in the trust, and so they're not really a good target to be bought out. It would be very costly for them to sell out. So First Citizens Bank, Chase, and U.S. Bank. Those are the 3 banks that, based upon my vast experience and clients that I see, of where people should be.
Shellback, we have a couple of questions for you. Shellback says, what about credit unions?
Credit unions are fantastic opportunities if you can get one in your local area. The problem is that there aren't a lot of credit unions in every community. If you can get your hands on a credit union, go for it. Now, I am going to throw this cautionary tale out, and people aren't going to like what I'm about to say, but it's the truth. Navy Federal Credit Union isn't actually it is a credit union, but it's backed by Chase. So the truth of the matter is that when you're banking at Navy Federal Credit Union, you're not banking at Navy Federal Credit Union. You're using Navy Federal Credit Union to bank at Chase. And Navy Federal Credit Union doesn't like to broadcast that, but that's the truth. And I'm okay with that, because what that means is that Navy Federal Credit Union is backed by Chase. That's their backbone. So when you send wires and you get direct deposits, it's going through a Chase system, but you get that level of care and attention of a credit union backed by a global stable bank like Chase. So I do. People don't like me saying that Navy Federal Credit Union is really Chase, but that's a good thing, not a bad thing, in my opinion.
Mark the Infinitely Tired asked, why isn't the Bank of Tortilla in Monterrey on the list, Mexican Ironman?
Well, I don't know. That is a very good question. And by the way, I can only imagine, like, for International Women's Day, for the Latinx convention that the ladies had at Silicon Valley Bank last week or the week before. I mean, what did they do? Did they get together and make tamales?
No, it was a peach shaving contest.
I mean, I can just imagine, okay, ladies of that. I can just imagine the Karens. Okay. Well, you know what we've got to do for the ladies? We've got to give them what they want. Okay, at 10 a.m., we're going to make tamales, okay? And then we're going to make them for lunch. And then we Latinx, at 1 o'clock, we're going to have the piñata making workshop, okay? And then at 2:30, we take break, and we come back 2:45. We're going to go into the laundry and folding seminar and learn what are the latest technological innovations in the washing machine and the dryer. And then we are going to learn about technologically with what we can do with the automatic folding machine. Yeah.
Mexican Ironman, do you mind if I ask some personal questions? Because I want to be sure if me and my parents are okay.
Fire away. We mean personal questions. Walks in the park, Pisces, sunsets, afternoons out on the boat. I'm answering all of Mag's personal questions. You see that? See what I did there?
Andy Masterson asks, Loki, am I supposed to make a 1/6 Mikey as Conan or in a 3-piece business suit?
Well, the 1/6 Mikey as Conan, we'll send that for Mag so she can play with it. Get it? Or we could send her one in a 3-piece business suit, and then she pulls a little ribbon, and then it all falls off. Oh, I'm hilarious. Yeah, Mags, call me. DM me. Here, let me go on Twitter. I'll send her my cell phone. She can call me. Hold on.
You forgot
Loki.
the 2-hour siesta from 11 a.m. to 1
Oh,
p.m.
that's right. Chris Person. Yes, I was like, okay, ladies. And then the Karens are there like, we're doing so much for them. Can you see their lives are changing? Their lives are changing. We're doing it.
Okay, ladies, line up right here. We are going to be here with Jose, and he is going to teach you how to squirt your peach.
Yeah. I can just imagine they probably have like workshops on how not to find a high value man, or how to fight the Latinx patriarch, or how to fight the Latino patriarchy. Some shit like that.
I have to agree with Pops that figure Andy sent you. Absolutely epic, dude. He looks like the mariachi. He looks like almost like a priest when you put that hat on him, and he's got that all black. All he needs is that little white thing on the neck.
Well, the funny thing
like,
is that it's just how well Andy knows me is that I wear black all the time. I wear black suits. I wear black t-shirts. I wear black all the time. My workout shows. I just always been that way.
And yeah, Mark, that did sound like a Latinx Hans. Yeah, ladies, line up. We are going to squirt the peach. Peach squirting contest starts in 5 minutes. The Bears, Mexican Ironman. Ooh, you are furry.
Whatever.
Father Ironman, yes. Father Ironman.
Yes. Thank you, Andy Masterson. I love it.
If you're promoting an International Women's Day, a Latinx event, you deserve to be in trouble.
Yeah.
And we're out of here, guys. It's 2 past the hour. I know Mike's busy. He's got to hit the ground running this morning. Thank you for taking the time to be here, brother.
Oh my God, I love being here. I love this show. Come on. And I love this community. And hail Valhalla, and hail Loki, and hail everybody.
Hello, everyone, guys. Have a great day. I will be back later tonight on Pops' stream. So I will see you then. I have no idea what the hell we're talking about today. I was reminded Happy Pi Day 3.14. Oh, yes. Pi. Get it, Mike? Pi.
I was reminded Happy Pi Day 3.314. What does that mean? 314. What does that mean? March 14th. What's today? St. Patrick's Day is March 17th.
It's the date. No, it's the date today, and it's pi.
Oh, ha. Got it. Sorry. Math joke.
Math guy. The math guy. I'm not even a math guy.
Dude, I'm in tax mode right now. I'm not in math mode. I'm in tax mode.
All right. We're out of here. God, thank you so much, Mags, for that $2 super chat. Guys, we're out of here. Take care. Be excellent to each other. Always speak brand manner. We'll see you guys in the next Taco Tuesday with Mexican Professor Ironman. Take care, everybody.
Bye-bye.
These videos are tremendous. Like, comment, and subscribe, and hammer that notification bell.